There has been a rash of some big name stocks hitting 52-week lows, and some of them are controversial. Some that you may not have even known were at 52-week lows given how much hype they receive around them. But this list looks very different than it normally does, and there are some incredible lessons to be gleaned from it, and we will discuss all that as well. I'll tell you if there's a massive opportunity, just like Meta at its lows, or if this is just kind of one big giant trap because of all the hype that comes around some of these stocks. Just make sure you like the video if you like the truth without the hype, and if you like these style videos where we talk about stocks that we don't normally talk about. And if you want information on financial freedom and retiring early, make sure you check out the pinned comment down there for my new channel, where that's all we talk about down there is exactly how to accomplish both of those. Now let me be upfront and clear about this one point. I could care less about 52-week highs and 52-week lows and everything else like that, simply because it tells me nothing about valuation of the stock. A stock can be at a 52-week high and still be significantly undervalued, and vice versa. A stock can be in a 52-week low and still be extremely overvalued. So you've got to kind of understand that dynamic and understand, I'm not looking at this strictly as, hey, these stocks are at 52-week lows, therefore they're at bargain prices. There's a lot more to it than that. You've got to actually look, is it actually undervalued or not? And we'll try to kind of uncover some of that today here in regards to these stocks. But I just kind of want to delineate that point just a little bit here, because there's a lot of folks out there, and I'm not trying to call anybody out or create any sort of controversy whatsoever, but there's some folks, every time stock hits a 52-week low, it's a bargain buy, and you got to buy it because it's at a 52-week low, and nothing could be further from the truth. What matters is valuation, not being at a 52-week low or not. Again, I'm not trying to be controversial, not calling out anybody else, not putting any names out there, just trying to say valuation matters far more than 52-week high or 52-week low. And speaking of controversy, the last two stocks are absolutely controversial, and they kind of divide the YouTube investing community here. So make sure you comment down below and let me know what you think about those two stocks there at the end. But we got to get to the first round first. So the first stock up is Lucid. Look, guys, I've not just been warning about this stock since it hit its 52-week low 52 weeks ago, and it continues to fall lower. I have been warning about this stock since it was at its highs at $60 or so, that it was absolutely overvalued, and there was absolutely nothing behind the run that justified that valuation at that price. Remember, kind of keep in mind, back then it was touted as the next Tesla, and nothing could have been further from the truth. They were still at the beginning stages of everything, not like Tesla, who had already gone through the pain and the growth and made it to the actual other side of production. Lucid's still there at that first block, and they're struggling mightily with that. Now, I agree, there's macro factors affecting that. There's a lot of other things affecting that are outside of Lucid's control. But the point being, until they kind of get through that point, there's going to be a lot of up and down trading, and there's no need to FOMO into a stock like that. It takes time to scale in this particular industry. And I'm sorry, the price just continued to fall and continue to fall. And it may be somewhat starting to reach a point where maybe you start a speculative position. But in this sort of environment right now, there's nothing telling me that that's guaranteed for sure, and we aren't going to see lower prices. It's one of those stocks, I warned about it back then, and I'm also warning about it now that, hey, it's just one of those deals. It's purely speculative at that stage, and unfortunately, if those Saudi backers decide to back out, and the Saudi backers tend to have, I don't know, it just seems like unlimited money, they choose to back out and they no longer want to back this project, Lucid is in a lot of trouble, and at that stage, it's absolutely a bankruptcy candidate. So for me, there's better places to put my capital that are with far less risk with just as much reward than there is Lucid. Number two is Vertex Energy. Here's one that I kind of get asked about periodically, and I really have for a really long time. I'm not sure if it's kind of a YouTube favorite, if it's a Wall Street Bets type thing, if it's popular on Robinhood. I really don't know. I just know that I get asked about it periodically. And when I just took a quick look there at their last earnings call, we see declining EPS, declining margins. It's just struggling right now. And given the fact that commodities are also struggling, oil is struggling, been struggling since, kind of the whole Russia-Ukraine situation kind of kicked off and spiked it up real high. It's just done nothing but crater since then. So it's kind of a tough market to really gauge, when does that stop? When are we going to see an uptrend in that? And remember, they're not one of the giant players like an ExxonMobil or somebody like that. So where does that kind of all fit in? Where does that leave a company like Vertex? Now, for me, I personally don't like commodities at all. Commodities trading and commodities in general are a whole different type of investing from stock investing. I understand this is a stock, but it's a stock based upon commodities. And that's a whole different market right there. And I just don't understand that. So for me, I stay completely away from companies that are tied to commodities like this, because it's just outside of my circle of competence. And that's just an old Warren Buffett thing that I learned a long time ago, that every single time I break that rule and I invest in something I don't understand on a high level, it just makes for a bad investment. Even if I make money, it was a stressful investment to make that money. So for me, I'm staying far away from this because I don't have the confidence in order to effectively analyze, is this actually a deal and something to where, hey, Wall Street's getting dumb, like a Meta opportunity or, Google or Amazon or any of those, last year in 20 or 2 years ago now in 2022? Or is this much more of a, there's a lot more pain to come and this is basically another tattooed chef situation? I don't know. I can't tell. So for me, I've got to kind of back away from this one and let you guys decide. Let me know down in the comments, for those of you guys that have studied this stock, exactly what you think's going on with Vertex. So stock number 3 would be Workhorse. This is another one I warned against about back in 2021 on that crazy hype run. But the question kind of becomes now is there an opportunity at these lower prices for a Workhorse? Because I actually do like the product. Unfortunately, I'm not sure there's a huge market for this product, and any product that their future growth is based completely upon one contract, like it was with the USPS contract, and they didn't get it. That to me is just a company that I don't want to be a part of, because there just isn't a lot of upside for this stock when you actually get down to valuation here. So unless there's something different that's happening there with Workhorse that I haven't seen yet, I just don't see anything at this stage that tells me, hey, this company's going to revive anytime soon. Unfortunately, it was a product of, hey, they went IPO at the right time. Those folks that cashed out on that hype at the right time made a lot of money, but there's not a lot of substance behind the company at this stage to really tell me there's a huge growth potential ahead in terms of valuation for this stock. So for me, it's one I'm staying away from. So on to the controversial part of the list. And yeah, these stocks are divisive. So comment down below with your opinion on these stocks. But hey, you guys know, I got to be honest with you. I got to give you the truth. So that's exactly what you're going to get right here with these controversial stocks. So stock number 4 is AMC. Look, I know, go ahead, apes, blast me right now. This has been a battle we've been having for more than a year now in regards to this stock. But there is just, I don't know, management team's a disaster. Although I love going to movies when I can, I don't get to go often. I would love to go more, but I absolutely love the theater experience, everything about it. I love the company itself, but I can't say this management team isn't a complete disaster. Sorry, you buy gold mines, you do all these ridiculous stunts that get a certain part of your investor base fired up, but it means absolutely nothing to actually drawing money to the bottom line and creating profits, which is what actually matters in the stock market there. So it's one that no matter what sort of gimmick they've thrown out there, no matter what they've done in regards to spinning off this and buying gold mines and whatever other ridiculous things they've done, none of it has actually brought value to you as a shareholder if you're a shareholder of this. And I'm sorry, the idea of $100,000 per share and all that other ridiculous stuff like that was never going to be true in the first place and mathematically impossible to be true. Sorry, I don't see a play here for right now. I don't know when theaters are going to turn it around. I'm not sure if this management team even has the right mix to actually create something and to actually start creating shareholder value for us shareholders, not stuff that creates hype, stuff that actually creates value for shareholders. So for me, this is one, sorry, got to stay away from it, not going to touch it. And so far, it's been a great call for more than a year now. And finally, we have the final stock, and that would be Fisker. All right, I have to admit this up front for all my Tesla fans out there. I'm not going to lie to you. When I first saw a Fisker way back in the day, and I'm talking not this version of Fisker, the previous version of Fisker, and I saw a Tesla as well, that version of Fisker blew Tesla out of the water. It was nicer, it was slicker, better made. Everything about it was better. But there's far more to a company than just having a slick product. You have to be able to mass produce it, obviously get people to buy it more importantly, and then be able to scale that out over the course of time and be able to make that transition through. And that's not easy, no matter how awesome your product is up front there. So I have not seen the new version of Fisker, but I assume it's very, very similar to the old version of Fisker. But even if they've figured out some things and they've got a lot of things working in their favor, if Tesla's struggling right now, with all the capital that Tesla has, with all the lessons learned, with all the gigafactories, with all the other advantages that Tesla has over a company like Fisker, if Tesla's struggling, that tells me it's going to be a very, very, very tough road to hoe for a vehicle like Fisker. And it's just a product of the time right now. Can they make it to the end? I'm not sure. You might see a lot more dilution if you decide to own this stock, because I don't know specifically what their cash burn is, but I can't imagine they just have gobs of money. So for me, this is just as likely to go bankrupt as it is anything else, unless they get a huge injection of cash to kind of push them through this other side. Now, if they can get through that other side, maybe it gets interesting there, because there's not a lot of choices in the luxury EV market that's out there. I understand Lucid's out there, but we understand their struggles as well. And we need more than one choice out there. At least here in the US, we want way more than one choice when it comes to those sort of things. But the problem isn't the product, and the problem may not even be the product. It may be, as a business, can you get to that other side over there in this particular environment? And that right there is what makes the stock so risky. So for me, again, I don't need to take on this sort of risk in my portfolio. I think there are better risk rewards out there in the stock market, and that's what I'm going for. And if you want to see exactly what I think those better risk rewards are, make sure you check out the pinned comment down there for my group, where you get to see my complete watch list with price targets, my buy and sell alerts in real time on those stocks. You can use our stock analyzer tool for free and take 5 courses for free. Jump in the best 6, 7, and 8 figure Discord out there. We got tons of live events that are going on right now that members are jumping all over. There's just so much going on, guys. There's so much more that's going to get announced for the group. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.